Hello everybody, welcome to my course. We will be covering every topic related to blockchain and cryptocurrencies. But before we can dive deep, very deep into cryptocurrencies, let's start by understanding what a currency is or what money is. By definition, money can be any item that can have a verifiable record. It should be generally accepted for the payments and for the exchange of goods and services. There are few functions or few qualities that every money possesses. First, it is a medium of exchange. Second, it is a unit of account. And third, it is a store of value. For example, you have a note, let's say a 500 rupee note, and just because the government has declared it as a legal tender, everybody have decided that 500 rupee note has 500 units. Rupee is a unit. 500 is the magnitude, or let's say it's the number. Is its strength. So this way, a 500 rupee note, it has a unit of account. It has a store of value that it is of 500 rupees, and it can be exchanged for anything that is worth rupees 500. So in the very basic definition, a currency or money is acting like a medium of exchange with a unit of account and a store of value. If we go talking about the history of money, we have seen almost like all sorts of things that have been treated like money: metals, seashells, cattle. We started with a very basic system of exchanging goods to goods, which we call as barter system. Then we brought coins, metal coins. Later we brought printed notes. Then we brought digital money, and now we have what we call as cryptocurrencies. And across the history there has been all types of ideas, like Aristotle's metalist, Plato's chartalist concepts. There are many theorists, philosophers, economists who have presented their own theories and own philosophies of money. As money evolved, there were few security measures that we wanted to take. For example, when we were treating seashells, or when we were treating even, let's say, metals as money, there was a huge possibility of these elements being counterfeit. But later, what the government decided to do was they started issuing their own coins, right? And I think it started somewhere, I think the historical evidence go to somewhere 2000 BC. And in India also, we know like many very old dynasties whose kings started issuing their own coins. And they established a rule that no other currency can be supplied or can be produced by anybody else in the country. Only the ruling state will issue any currency which is out there. And this kind of system, it is still established in countries, every country. It is the central bank that issues the fiat money, which is in India INR, which is Indian National Rupee. What decided how much money can be printed? Every country adopted different kind of standards. I think back in 1821, United Kingdom introduced this new standard, or called as gold standard. What they decided was that a standard unit of currency, it will be typically kept at the fixed value of gold. So when the international trades were happening, there was more trust and more confidence between two parties who were trading with each other, and they were able to, since both the governments or both the countries were accepting gold as a standard, the medium of exchange between their currencies was also very easy to establish. Why? Because they were on a common ground and they were on a common understanding of treating gold as a standard. One thing that has to happen with any currency, it is that it has to be democratically accepted by the people. If I and you are transacting, we have to establish a consensus between each other that yes, we agree to trade or to exchange our services or to exchange money, and the value is also something which we will decide between us. It started, it just started from paper money, then it evolved, then the gold standard came in, then the cards came in, and now the recent form of centralized money what we're using is electronic money, or let's say digital money. In the current world, there are three ways how we are able to transact. We have cash transactions where we directly pay the seller cash and we take goods or services from them. Then we have an electronic payment method where we use, let's say, the net banking, where we take the goods or services from a seller and we transfer their money into their bank account directly. Now comes the third method, where we are taking the help of a bank, or let's say central authority. This central authority is maintaining a database which we call as ledger. We ask the bank to do the transaction on our behalf. What we do is we tell the bank that yes, we want to send our money into this particular bank account. Now the bank debits or deducts the amount from our bank account and transfers it to the receiver's bank account. Like I mentioned, in this type of process, we are heavily relying on this central authority to do all the transactions and all the amounts we have to transact or send or even receive between two people. So with the electronic payments, what happens, especially in a country like Bharat, now we are seeing this whole UPI system. And let me tell you this, it is one of the most advanced and quickest form of payment system ever established in the whole world. This was the culmination of evolution of money. Till now, what the digital money has been, centralized money has been, I don't think it can get better than this. That now it is completely run on internet. It is completely electronic and digital. All the original problems that previous forms of monetary systems were having, at least those have been completely removed. However, there was this one problem which was still existing with this current form of money, and that was the reliability on a third party or reliability on a centralized organization. And this is something which we have been seeing throughout our history. Whenever most of the financial crises have happened, is that whenever, let's say, a centralized body that is controlling our money, that is storing our money and also helping us in transferring of that money, it collapses. We have to keep in mind that the money we have stored in these bodies, they will also be nowhere to be found because the bank has gone bankrupt. So we will not be able to retrieve funds, and we have to accept this fact that the money we have stored in these banks, it's also gone. This brought the whole concept of decentralization. And decentralization is something that is not only introduced in the financial ecosystem, it has become a necessity of the future. By necessity of the future, I mean, for example, earlier, how we were deciding which land belongs to which country or which land belongs to which king or ruler. They were straightly going out, having wars, establishing their power, and claiming that particular area of land. But later, what we decided was more of a democratic process. Currently, how the leaders are chosen in all the countries, most of the countries, it is a simple democratic process where the people have to vote for the representatives, and the person who wins the maximum number of votes is chosen as the leader of that particular area or the particular nation. So what decentralization did was, decentralization completely removes the dependency of any kind of service or of any kind of operation from one single body or from one central body. And with the decentralization, the whole power of governance, the whole power of control, it shifts back, it distributes from one central body to back to people. And what we had to decide between us is that how can we decentralize the financial ecosystem? In the process, or in the motive of decentralizing this whole financial system, we had to remove the reliance we were having on these central authorities or on these banks. Decentralization, in its very fundamental definition, means is that the power of governance and control, which is with one central body, it will be distributed back to people. Satoshi Nakamoto, back in 2008, who we don't know who he is, he created a system where people can transact between each other, and this whole process of updating the ledger and validating the transaction will not be done by a central authorities, it will be done by people themselves. And in this whole process of decentralizing the financial ecosystem, he created a system or an infrastructure which was led by rules. It was completely on internet, and the best part about this whole system was that anyone can be part of it. You can be someone who is transacting, you can also be someone who is validating or updating the ledger. And with this whole process of evolution, with this whole step of evolution, what came into the picture was blockchain.